Did you ever thinking about investing in the stock market or the ATM business? Which one's better? Here I'm going to give you some tips and tricks to what we believe in. Hi, this is Phil from the ATM Mastermind Group page, and we help hundreds of aspiring ATM business owners go from 0 ATMs to ATM Business Pro in as little as 30 days. All right, so you're thinking about investing, maybe you're thinking about real estate, maybe you're thinking of Bitcoin, maybe you're thinking about stocks. All right, so we're going to give you some of the breakdowns on the stock market and how ATMs, you can position yourself either to invest in stocks or the ATM business. All right, so let's talk stability. When you invest in the stock market, you invest at a point and either the stock is going to go up or it's going to go down. Now, traditionally, what you're trying to do is you're trying to double your money in every 7 years. Do that, you need a rate of return of 10%. Some of the experts, what they tell you is what you want to do is you want to invest in your money and double it in every 7 years. The only way to do that is to have a rate of return at 10%. So a lot of times, if you have a financial advisor, they will put you in some kind of simple IRA or a mutual fund that will give you a rate of return. What they have looked at historical averages somewhere between 7 and 10%. Then they could say, hey, it's not as important. You want to invest now, and then over the long haul, we're hoping to get around 10%. So usually they're going to put you in some kind of growth fund of this nature. And your goal is to double your money in 7 years. They call that the law of 72. The challenge is if you don't do it that way, then what a lot of people do is they pick stocks. So what I did is I took some common stocks, looked at their averages, and I'm going to compare that to the ATM business. So what I did is I picked 3 stocks: Facebook or Meta, Chipotle, and Apple. Great stocks, what I would consider almost blue chip stocks. They have historical values. Now I looked at all 3. They had a rate of return in the last 10 years of between 20 and 30%. Now, by stock market averages, that's a home run, very good. Of course, you have to deal with the swings. Facebook, I remember, was up to 300, went all the way down to 85. So depending on where you bought it, if you bought it low, okay, great. But if you bought it at 300 and it went down to 85, you might have decided to get out. This is a challenge when you deal in stock is, do I want to stay in? Or do I want to come out? Am I losing all my money? You have to deal with all the anxieties of the stock market. With the ATM business, we have a constant rate of return, and it usually starts at right around 40. It'll go up to as much as 100%. Now, keep in mind, there are some, if you pick a bad location, you might not get that favorable return, but even in dog locations, you always make at least 20% rate of return. So what you want to do is you want to pick your battles. Do I want to get an ATM business where I'm going to get a 40 plus rate of return, or do I want to be in the stock market? And if I pick a home run, like a Facebook or a Chipotle, could get between 20 and 30%. But you have to deal with the swings of the stock market, and did I pick it at the right time? Point number 2, we have fees. When we invest in the stock market, we have fees of buying the stock or buying a mutual fund. You have to pay every year for that. If you go with a financial advisor, they usually take 1% of what they call your total income. So if you have $10,000, they're going to take 1% of that. So you got to outperform that 1%. So when we were talking about I have to earn 10% or more to double my money, keep in mind the asset managers or wealth managers like they call themselves, is they're going to take 1% of your total investment. So if that's $10,000, they're going to take 1% of that every year. With the ATM business, it's fee based. So guess what? Now we're making the money. We get surcharge. We take a percentage of that surcharge. Sometimes, let's just give you an example of $3.50. Maybe you cut back 50 cents to the location. You keep $3. So that fee you are making day after day, week after week, month after month, and you get your money first. You don't have to wait for your money. Point number 3, ATM accessibility. You can place your ATMs in convenience stores, gas stations, hotels, malls, strip centers, laundromats, dispensaries, truck stops. You will be able to place your ATM in almost everywhere. Now, keep in mind, there is some competition out there, but there's new businesses open up every day where you can gravitate to those new businesses and place your ATMs. Tattoo places, car washes, these are all places that you can place your ATM. There is some competition out there, but it's fairly easy to place an ATM. And don't forget, each ATM withdrawal makes you money. So if you're thinking about starting your own profitable ATM business, didn't know where to start, stay in the video, and I want to invite you to our free checklist entitled ATM Business Passive Income Checklist. 5 things you need to know to start your profitable ATM business so you can have a clear roadmap towards ATM business success. You can earn between $250 and $1,500 of passive income every single month. All right, let's get back to the video. Number 4, lifestyle. So if you're in the stock market, you will have to pay attention to the stock market. You're gonna have to glue yourself to the monitor to watch this ticker tape. This is what they call it. That's what they used to call it. But basically watch stocks go up or down, and so you can make educated decisions when to get in the market, when to get out of the market. You have to look at analytical data. You have to study the trends and the flows if you want to be a savvy investor, or if you don't want to pay so much attention. So ATMs are very constant. There's less stress to the ATM business, and you don't have to worry about your money going up or down with every quarterly report. Did the stock market beat the expectation of what they expected or not? You have to be vulnerable to those conditions. So number 5, why are investors choosing the ATM business over stock market? Very simple. Savvy investors are investing in the ATM business because of cash flow. Constant cash flow that comes in day to day, week to week, month to month. They can control their investment by either raising or lowering the surcharge to increase the amount of revenue that they're going to make on the transactional fees. So if you're thinking about getting into the ATM business, click the link down below and start your ATM journey today. Again, this is Phil from the ATM Mastermind Group page, where we buy your freedom back one transaction at a time.